Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to take a look at Yahoo Finance, and I'm going to show you how I analyze stocks using Yahoo Finance. This is for the free version of Yahoo Finance. I am a premium member of the service, but for purposes of this demonstration, I decided I'll just use the free version because I know that's probably the most popular one. So we'll look at all the free features. We'll skip all the premium features. I'll do another tutorial on the premium features here in a few weeks or so. But I'm just sharing with you how I look at an individual stock on Yahoo Finance, how I analyze it using the information they have, and maybe you'll pick up some tricks along the way. If you use Yahoo Finance, you find this tutorial helpful, please do me a favor, give this video a like, share it with your friends, subscribe to the channel, all the things. Thank you very much for your support. All right, so again, our purpose here is to analyze a single stock using Yahoo Finance. For this demonstration, I just chose an easy one in my opinion, and that is Microsoft. And Microsoft's a good one because you got years of historical data. It's relatively predictable. So that's why I chose this one. And right off the bat here on the Microsoft stock page, obviously you have the price. You also have this visitors trend, which is kind of helpful. If you click on it, it'll just try to sell you the upgrade to premium. But you do get the free eyeball look over the past, 2 weeks, 10 weeks, and 9 months. And it's always good to see some upward momentum in the stocks that you're interested in. As you know, 2020 and even here in 2021, momentum has played a huge part in prices of the stock market. So eyeballing this is never a bad idea. Scrolling down to the more fundamentals where I spend most of my time, obviously P ratio, EPS. These are two data points that are important to me. Generally speaking, with stocks, I am looking for profitable companies that do have an EPS or are at least in line to produce an EPS over the next year or two. Really just depends on the individual company. Obviously with Microsoft, we've got no concerns with an EPS of 671. And you can divide 671, or excuse me, you can divide the price, $229, divided by the EPS of 671, and that gives you your P ratio of 34. All right, the other thing I like to look at down here is the 52-week range. So we've got 132 to 246 for Microsoft. And you can run a quick comparison just by going over to the chart here and choosing 1 year. Obviously, you have a lot of different views in this chart, which is super helpful. I look at this all the time, take different approaches. But for the 1 year chart, we can use this 52-week range and just get an idea like, hey, when did this low happen, right? When did this high happen over the past 12 months? It looks like on the low side, that probably came on the COVID dip, and it looks like since the close of that day was at 137, you can see that off to the right. This was probably an intraday low, so it doesn't necessarily show up as a closing price, but we'll just assume it was an intraday low of 132. Then on 246, we're obviously way over here somewhere. February maybe 8th, that might be an intraday high as well. February 8th, you were at 245, and now you're at 229. And the real gist here, particularly on like a 1 month or 6 month view, just like, hey, before I buy the stock at 229, do I think that another price sale opportunity might come up? And we look at Microsoft, what is this, 6 months? We can see that, hey, there's a lot of peaks and valleys in here. You could argue that you just came off of a peak on February 12th and now you're down to 229. But the real key is just trying to get a feel for how it trades from a volatility standpoint. I would say that if I did this video on February 16th or whenever we were at 244, you would probably start to think, wow, this looks a lot like a peak to me. and I may take my chances that it will go down from here, at least to some degree. In Microsoft's case, that would have paid off and you could have saved 20 bucks a share. Doesn't always happen that way. But it's one way to look at it, and that is the way that I look at it, to be honest with you. All right, if you're curious, from a guy who uses Yahoo a lot, I don't pay a ton of attention to this one-year target estimate of 273. Not to say that it is inaccurate, but I have noticed that this, if you get into a more volatile stock or a popular growth name, this data point tends to get outdated very quickly. All right, another thing that's kind of cool is you can go to this full screen chart with any stock on Yahoo. And right off the bat, you see this at the bottom, the visitor trend. You know, obviously they want you to upgrade to that. You can just get rid of that. I think it comes back on every page load, but you can get rid of that so that you have more room to look at things. Now, I'm using an old Yahoo login of mine because I wanted to be able to do this demonstration without any premium features. So it looks like it's locked into a custom date range here. We're just going to go with the one-year chart. And at least on my login here, it looks like it has some of my stuff already built in. 50-day moving average, 200-day moving average. Is this a default, or is it something I put in a long time ago? I can't tell you, but how you could add that information, if you go to indicators and you see right at the top moving average, you hit that. We want the 50-day moving average, which is a commonly used metric to just chart out what is the average price for Microsoft over the past 50 days. So that looks good. And then once you have those added to the screen, you can click on the little bars if you can get them in your crosshairs, and you can adjust them as needed. So another common data point you see here is 200-day moving average. Same thing, just across 200 days. And you just save, and you can mix and match the colors however you want. And then at the bottom, RSI, which is Relative Strength Index. A lot of folks use RSI in different ways. I keep it pretty simple on a range from 70 to 30. And really what you're looking for here is as the RSI gets to around 70, you start to think that perhaps it's reaching the top of its buying interest. Subsequently, if you see that number drop either to the middle of the zone or to the lower portion of the zone headed into the 30s, then you could make the argument that buying is soft and we might be poised for a bounce back. Now, as far as how the 50-day and 200-day work together, you could study philosophies on this a lot. Just for my purposes, you know, I kind of want to see it in a range to lower because I'm trying to buy the dip, so to speak, right? Or I want to save a couple dollars. So last week when the price was $245 in this example, I can see that it is, you know, way above the 50-day moving average, which makes sense. But then I look down to RSI, and that's pretty hot too. So I would probably be inclined to just watch the stock for a few days and see if I could come into a better opportunity where I wasn't buying it on all the high points for these metrics. And you can see that, you know, as time went on, the RSI went down a little bit, the price went down, we're getting close to the 50-day moving average. So it's a little more palatable at 228 if I wanted to nickel and dime the stock. All right, heading back to the main stock screen. Another tab that's super helpful for fundamental investors is the statistics tab. And I will say, when I show you the premium look, it gets a little bit better. There's just a lot more data. But you know what? For a quick look at a stock, there's nothing wrong with this free version. It gives you quarterly lookbacks over, looks like the past 4 quarters, and includes the current, right? I use this chart all the time. The trailing PE and how it has changed over time right? So if the trailing PE is going up, it just means that people are paying a higher multiple for Microsoft than they have in the past. We only have to go back to December of 19 and even through March of 20, which was right before the COVID, and this one was probably in the dip of COVID. We can see that, at least in this limited data set, that Microsoft, their PE is trading higher than it does in recent history. So back here at 36, they're saying today at 35. It's just another indicator to tell you that, hey, this is potentially slightly more expensive than it normally is. Same thing on the forward PE, although in this case, if we go back to December at 28.90, you're actually trading under. So Microsoft could be one of those companies where the EPS is building, and even though you're paying more from a look-back standpoint, the forward PE, which is arguably more important, is about flat, if not cheaper than the past couple quarters. Then depending on if you're interested, you have PEG ratio, price to sales, price to book. Again, it's really good to just get a feel for how your stock that you're targeting has traded over the past 12 months or so. Scrolling down, this is a great time saver down here if you just want to take a quick look at the balance sheet. You know, the big argument on perhaps using PE ratio is that you can't see the debt of a stock, right? PE ratio does not incorporate debt. It incorporates EPS and price into that equation. But right here, you can eyeball the debt and you can make your own assumptions. We can see that Microsoft has $82.78 billion on their debt load. But looking up here, which is where I typically go next, this is total cash. They have 131, just call it $132 billion in cash, which is just, incredible, right? So, and this is billions of dollars. They have $50 billion more dollars in cash than they have in debt. So a pretty fair ratio right there. And the way I think about debt loads, in case you're curious, is I want to see a few things. One, what was their revenue over the trailing 12 months? Okay, $150 billion came into Microsoft just over the past 12 months. Great. How much cash do they have? $132 billion. Oh, how much debt? $82 billion. Look, $82 billion would sink a lot of companies, but when you look at it as a quick glance against their cash position and the amount of revenue that's coming in, it's a very quick way for you to eyeball if you need to dig deeper in the balance sheet. Obviously, with Microsoft, I feel like we're in a pretty good place. All right, next on share statistics, which is off to the right, I always double check the shares short. Really just looking at short percentage of float is the most important one for me. Microsoft at 0.54% of traders who have shorted the stock versus the entire float, which is the number of shares that are out on the market. If you see this number probably over 10%, you may want to dig in more and just make sure you're not missing a scandal or something. As far as Microsoft at 0.54%, there's the equivalent of zero to worry about in that department. All right, now I want to show you another helpful tab, which is this analysis tab. And this is a really cool tab because you get to see sort of a blind look at what analysts are thinking for Microsoft over the next year or two. So the first one is earnings estimate. So you're not going to see this filled in if your company is not profitable, right? Or if they're too small and they don't have any analysts covering the stock. That's not a problem with Microsoft. You have the current year. So the year that we are in right now, their fiscal year, we have 33 analysts who are covering this one. Average estimate of $7.40. You can compare that to the year ago EPS. So last year you were at 576. This year the average estimate for Wall Street analysts is $7.40. So more than this, which is great. And then you look ahead to 22 and you go up to $8.09 if they hit their goals. Now, a couple insights for you on these numbers. Number one, if you don't follow analysts, I can tell you that they usually come in conservative, and as the year progresses on and they learn more about a company, these numbers do fluctuate. So every month, if you came in here on Microsoft, you'd probably get another opinion on it. If it's a solid company and things are going well, this number is going to go up. Almost for sure in 2022, this $8.09 is going to go up, right? But it does give you like a baseline that you can use. So for example, $228 today for Microsoft. If they hit their target and land at, just above $8 at the end of 2022, in that case, their PE would drop into the 20s, right, at the end of the fiscal year. And this is what you want to see, right, is you're making progress at a nice pace. Now, again, I think 809, just knowing Microsoft does go up over time, we'll have to see. But you can get a feel for what you're going to pay on a stock just by using this analysis tab and the price and the average estimate for analysts. And if you want to get really granular, you can even go off the low estimate and the high estimate. I usually stick to average for obvious purposes, but there's no reason you couldn't compute your own EPS and using these formulas and just putting it into the price and figuring out where the stock's going to land. Same thing as we go down to revenue estimates. And this is probably more important when you get into stocks that don't have a profit, right? You want to see growth. And the average estimate for 2021 is $164 billion. The year ago sales right here, $143 billion. And they even give you the growth percentage, 14.8% if they hit this number. Then we look ahead to next year, it goes to 182. That would be 11% over this number. So you see how the average estimate for 2021, they automatically plug it into here just so that they can give you this projection. So it's good because you can see 14.8% likely up this year in revenue. And if all that hits, you're probably 11.3% up. All right, another cool thing to look at on this tab, earnings history. This can give you an idea for how analysts' average estimates come in. Don't forget, 2020 was a really wacky year with COVID. But what you want to see here is this is the average EPS estimate for the past. So in March 30th of 2020, they were thinking $1.26 on the analyst front. In reality, Microsoft hit $1.40. The difference was 14 cents. Their surprise percentage was 11%. And you can just eyeball surprise percentage because this is in the past anyway and get a feel like, hey, is Microsoft beating out analysts time and time again? On this look, yes, but we also know that COVID was an odd time for many stocks and industries. Down here on EPS Trend, this gets back to what I was telling you on how these EPS projections change over time. This is 90 days ago, 60 days ago, etc. Current year of 2021, 90 days ago, that number was at $6.77 for the average estimate. Now it's up to $7.40. Same deal on 2022. Started at $7.47, now it's up to $8.09. So almost for sure, unless Microsoft starts having trouble, they're going to beat this $8.09 in 2022, right? So you would expect the PE at today's price will likely go down even more than we speculate at this time. All right, and last thing I like to look at here is the growth estimates. This is a little wonky because they don't really tell you, what's growing, right? EPS, sales, or stock price. At least for me, what I'm looking for is double digits on the next 5 years, right? So 16.7%, Microsoft is in that territory. You can see how things trim down. You got 28% growth pegged for this year. Next year, as we saw up above, it's a little bit lighter, but the next 5 years per year, the average is 16.7%. That's a pretty strong growth rate, particularly for a mega cap stock that's making, hundreds of billions of dollars. All right, so those are the key metrics to analyzing a single stock on Yahoo. The other thing that's, probably more obvious, but it's something to think about, is all these articles down here. There's information in there too, and that's a lot of like the momentum you could link back to Microsoft. So if you're not familiar with the stock, you should probably be reading a ton of these articles, right? Just stay on this page, open it in a new window or whatever you want to do. You can also use, this is a little hit and miss, to be honest with you, but there's this conversations tab, and it's basically a public forum. And you can see people come in and they, they share their opinion. You can pick up some news headlines and hear from certain people. Obviously, though, with any kind of forum board, you're going to have spammers, you're going to have arguments, whatever. I do tend to look on these here and there, but it's really just scanning really quickly through here. And if I see something, this is a good example. What does the board think of Microsoft's new mixed reality product, Microsoft Mesh? So I don't really care what this guy thinks about Microsoft Mesh, but I will certainly take this nugget right here and I'll go off to Google and just see what the heck is Microsoft Mesh, what do I need to know about it. So hopefully that gives you an idea. All right, guys, so that was the free Yahoo Finance. All those features I just covered, everyone has access to that for free. Yahoo Finance is a great tool. And I know that if you watch a lot of stock market channels and a lot of TV on stocks, stuff like that, everybody's trying to sell you something, right? It gets very exhausting. If you're just a basic investor for the long term, man, there's a ton of stuff you can just get out of Yahoo Finance for free. Certainly enough to make a decent decision on any given stock. So I encourage you to use it. On my next review, I will dig into the premium features. Let me know in the comments if you're interested in that. I'll also try to do a larger review of all the different features in Yahoo Finance that you can use from a market perspective, just on a daily basis. But the most important thing is to understand how to use these free tools to analyze individual stocks. So I hope that was helpful. Again, if you enjoyed it, please give me a like, subscribe to the channel. Really appreciate your support. We'll see you on the next video.